Guys, this is the multi-dimensional trading.com video series. This is where we will show you how to trade on multiple time frames, ultimately multiple dimensions at the same time. So no matter if you're looking at the 1 day, the daily chart, the 4 hour, the weekly, the monthly, down to the 3 minute, the 1 minute, the 5 minute, the 15 minute, you'll primarily know which way the market is headed based on the way we are going to show you how to do it. If you are interested in this content, like and subscribe. This is the only place that is going to break it down this easy. And I don't like to use the word easy, I much rather say this simply, because this is really all it takes to pull funds from the market. Now remember, this is for educational purposes only. This is not financial advice, but we will show you how we do it. And if you want to mimic that or go out and back test that, see the information for yourself first and then go and practice or go and back test. We're going to start off with the US 500 futures, basically futures of the S&P 500. And this is one simple concept, very simple concept that is very profitable, easy or simple to understand. And that concept is break evens. Break evens. So, what does break evens mean? Break evens is very simple to understand because we've all been there. Okay? Imagine you buy here. I'll take the markup. You buy here. Okay? You buy at the lows. You're getting good prices. Buy on the dip one more time. There's a group of people here, a group of people here, a group of people all up in here that all purchased primarily in the same area over an extended period of time. Now, what happens to them? They get flushed out. Price goes all the way down. Okay, they are in a lot of drawdown from considering where they entered. Now, by the time it gets back to them, they're not in drawdown anymore. They are at zero. They are at break even. These people, these traders, imagine if this was you. We've all been there. I've been there plenty of times. I get flushed out, comes back. I'm not going to sit there and be drinking or smoking the hopium and hope that it just continues and I'm good to go. No, I'm getting the hell out of this trade as soon as I get back to my break even point. It's really simple to understand that if you feel that way when it gets back to you and you finally get your money back, well, guess what? There's a whole bunch of traders that feel the exact same way you do when the price finally gets back to them and they are at break even. They did not lose their shirt. They did not lose their money. They finally got back to break even. They can live to trade another day. Their account can live to fight another day. And they're good. They'll take the next one. This is what we do. We're traders. So the point of this is to understand that if everyone is, or the majority of people, we'll say it that way, are going to perform a specific action, or there's a high probability of them to perform a specific action, like selling their position because they finally got their money back, they get out of that position and sell. Remember, they were long here. Comes back, they don't want to be long anymore. They're just happy they got their money out. So all that long interest propping up the market is gone. You turn these buyers into sellers. Simple as that. Everyone sells. One more chance to sell. Here we'll do the markup. Sell here. Sell here. That was it. That's all she wrote. Break even. All of these people over a long extended period of time finally got their money back. They finally broke even and now they're out. Super, super duper flush down. Simple as that. That is a very easy concept to understand. This happens on the chart over and over and over again. It's what we go through, it's what people go through. It's painful to see yourself in drawdown for such a long time after you waited for it to go up and you thought it was going to continue to go up. You didn't take profit here. You didn't take profit here. And some people tried to buy the dip again and got flushed. And all these groups finally break even, right? And then they get out of their position, they sell, and they're out of there. All we're doing is reading the metrics, the dimensions of the market as it actually is. There isn't any super magic going on here. It is just basic common sense concepts. Very common sense. If this was you, just ask yourself, what would you do? If this was you buying here, or you bought here, and it flushed through and it didn't come down, didn't come back for quite a while, then it finally made it back to you. You would want to get the hell out of that trade just in case it turns around and then you'll get a better position later. It's as simple as that. Even if you were a smart, savvy trader and you DCA'd down here somewhere on the dip, by the time it got back to your original position, you still would get out. You would close the run, you would close this trade that you got in on the dip into these break evens, close, and then you would close that previous trade all at the same time. That equals massive selling pressure in this area. And just think of, there's a group of people who couldn't wait to get their money back, and there's also that group of people who maybe bought the dip and also will close their positions in the same exact area. So we got profit takers meet people who also are at their break evens, equals even more selling pressure, which means how we look at it at multidimensionaltrading.com, we look at it as a great place for us to go short because we are looking at this in a common sense fashion. This is multidimensionaltrading.com. This is lesson number 1. This is the easiest, and I really don't like using the word easiest, but it really does describe it. So I'll use the word simplest way to read the market. You don't really have to know a bunch of different chart patterns or fancy names. It's very easy, it's very simple to understand. Break evens. We've all been there. Like, subscribe. I will see you guys in the next one. Lesson 2 will be coming soon. Peace.